asking about the tax benefits of owning a home and why specifically owning a home will actually save you on your federal tax returns and state tax returns. So the one thing I want to go over is kind of what the basic benefits are of buying a home versus renting and how you actually see that savings on your tax returns. So for an example, let's just start out. Say somebody has an income, we'll say, of $100,000 per year. So here's their basic income. Let's say they write off all of their income and their taxable income for the year is $100,000. Now let's say that person is basically paying rent of $2,000 a month for rent. Okay? Obviously, we all know renting a home, you can't write off any of the $24,000 in rent that you actually pay every year. It's not a tax deduction. Now let's convert that to a mortgage. Now let's say your total mortgage payment is $2,000 a month, and that consists of $1,500 a month for your mortgage, $400 a month for your taxes, and $100 a month for your insurance. Of that $2,000 payment, everything but the principal is tax deductible. Roughly speaking, of that $1,500 mortgage payment, everything but about $450 is tax deductible. So at the end of the day, you're looking at about $1,550 per month of itemized write-offs on your tax returns. Now how that breaks down to actually saving you money on your taxes is this. So let's say we have $1,550 per month in write-offs. It's going to translate roughly into a little bit under $19,000 in itemized deductions. Now let's say somebody has that same income of $100,000 per year, and let's say their federal and state tax rate is roughly, call it, 30%. So that means they're going to be paying throughout the year $30,000 between their federal and their state income taxes. Now, the great part about this is, no, you don't get this $19,000 as a direct deduction that you're only paying $11,000. Where it comes in is it reduces your income down, what you're paying taxes on. So instead of paying taxes on $100,000, you're now only paying taxes on $81,000 of your income. So we have now not paid taxes on $19,000 of our income based on a 30% blended tax rate is roughly going to save you $6,000 per year in federal and state taxes. So that's giving you a $500 per month in tax savings. Obviously, owning a home for 5 years, you're saving yourself $30,000 in tax deductions and payable to the IRS and the state. So in essence, if somebody is buying a home, say at $300,000, and they're putting that 10% down, they're actually getting that full 10% back, or that $30,000 back, based on tax savings just over a 5-year period of time, not including the appreciation of the actual home itself. Hope that gives you guys a little bit better of a synopsis on how owning a home actually saves you on your taxes.